Hello, learners. The topic of the day is financial literacy and awareness. For those जो कि हिंदी में सुनना चाहते हैं उनके लिए वित्तीय साक्षरता और जागरूकता. इस टॉपिक के there are two parts to the topic, banking and finance, and the second part relates to savings and investment options. We will be primarily doing the banking and finance sections. So let's begin on the journey of financial literacy and awareness. First, what are the objectives? उद्देश्य क्या है बैंकिंग और वित्तीय साक्षरता के? तो हम सबसे पहले वित्तीय साक्षरता के कॉन्सेप्ट को एक्सप्लेन करेंगे. Then we will examine the importance of financial literacy. We will also discuss the nature of financial transactions. अलग अलग तरह के फाइनेंशियल ट्रांजैक्शंस जो कि बैंक के थ्रू या नॉन बैंक फाइनेंशियल इंस्टीट्यूशंस के थ्रू हम करते हैं. I will also explain what are non-bank financial institutions. We will also describe the significance of transition from the barter system to the present payment system. Then highlight the importance of technology in the banking system, discuss the role of banks in financial intermediation, and the role and importance of banking services in the economy. So let's begin with the introduction. Over the past few decades, there has been rapid technological advancements in almost all fields, and particularly in the field of information technology. This has facilitated modernization and globalization. Further, these changes in information technology have resulted in financial integration at different levels and at an unprecedented scale. So this together has led to a tremendous change in the ways and the instruments that we use in financial transactions today. This in turn, the ease of now engaging in financial transactions with various instruments now greatly has facilitated economic growth and financial inclusion. There are three important stakeholders in a financial transaction. ये कौन से तीन stakeholders हैं? The first is the surplus sector or those you call the savers, जो कि बचत करते हैं. The second is the deficit sector. By deficit sector we mean those who are in need of finance, that is the borrowers. Mainly the borrowers are for businesses or even consumers can borrow for personal purposes. Third are the financial intermediaries, and it is here where the banks and non-bank financial institutions come in. Now, though we have now various instruments that facilitate financial transactions and in real time, in very short time and in a very simple manner, but these changes in technology that has facilitated all this, provided all these advantages, has also given rise to new types of challenges and risks that are associated with these financial transactions. So we will look at the risks that are challenges and risks that are involved by and by. We will look at them. Now, I had said earlier that financial intermediaries banks है और नॉन बैंक फाइनेंशियल इंस्टीट्यूशंस है. तो नॉन बैंक फाइनेंशियल इंस्टीट्यूशन क्या होते हैं? नॉन बैंक फाइनेंशियल इंस्टीट्यूशन इज अ कंपनी जो कि इट इज रजिस्टर्ड अंडर द कंपनीज एक्ट 1956 कंपनीज एक्ट और 2013 की कंपनीज एक्ट. इनकी प्रिंसिपल बिजनेस जो होती है ये है लोन्स एंड एडवांसेस देने की, एक्विजिशन ऑफ शेयर, स्टॉक्स, बॉन्ड, सिक्योरिटीज एट्सेट्रा जो कि गवर्नमेंट ऑफ इंडिया इशू करती है या कोई लोकल अथॉरिटी इशू करती है, लीजिंग, हायर परचेस, इनकी ये मेन फाइनेंशियल एक्टिविटीज़ होती हैं. बैंक्स और नॉन बैंक फाइनेंशियल इंस्टीट्यूशंस में फ़र्क क्या है? पहला फ़र्क ये है कि ये दोनों दे आर सब्जेक्ट टू डिफरेंट स्टैट्यूटरी एंड रेगुलेटरी रिक्वायरमेंट्स. The major difference is that non-bank financial companies, they cannot accept demand deposits like the banks do. Second, non-bank financial companies do not form a part of the payment and settlement system and cannot issue checks drawn on itself. So there are other differences too, but I'm just highlighting the main differences. Now let's go on to financial literacy and awareness. What exactly do we mean by this? वित्तीय साक्षरता से हम एग्जैक्टली क्या समझते हैं? नाउ वित्तीय साक्षरता के लिए आपको सर्टेन कॉन्सेप्ट्स जानना जरूरी है. वो कॉन्सेप्ट्स क्या क्या है? बजटिंग है, बिल्डिंग एंड इम्प्रूविंग क्रेडिट है, सेविंग है, बोरोइंग एंड रिपेइंग डेट है, इन्वेस्टिंग है. ये सारी चीज़ों का कॉन्सेप्ट आपको समझना होगा, क्योंकि ये प्रोवाइड करेंगे आपको वो एबिलिटी जो आपको फाइनेंशियली लिटरेट बनाएगी एंड यू विल बी able to make more informed financial decisions in your life. So the basic thing here is you will be better informed, you'll make better financial decisions, and you can work more effectively towards your financial goals in real life situations. So basically, financial literacy will allow you to efficiently manage your finances. It will provide you with various financial skills and knowledge about financial instruments with which you can effectively manage your income, expenditure, savings, investments, borrowings, and even tax obligations. Keep that in mind. So the first aspect is to knowing about all these concepts. Now let's begin with each of them, that the terms that we have referred to. First is budgeting. Budgeting is basically knowing or making heads of different heads of expenditures you will be spending given your income. So learning healthy spending habits is very important. Now, how one way to do the budgeting is that you could start identifying the heads under which your monthly expenses fall. So, for each head, you'll identify all major heads for which you'll have to make your monthly expenses, and then keep track of the expenses under each of the heads. This will ensure that you are not overspending, especially on non-essentials. So budgeting is one way which will help you avoid to overspend or spend on certain things that are not really essential. So by doing both these things, you can create more room for essential things that you have to spend on, and you'll be able to save more. So let's look at different methods of budgeting. पहला है what is called the 50-20-30 method of budgeting. What these numbers signify, what this method means is that it involves setting aside 50% of your take-home income. That means your post-tax income, not your gross income, of your take-home income for your needs. Mark the word needs. 30% for your wants. Mark, there's a difference between needs and wants. Wants are basically unlimited. So keep that difference in mind. Needs are essential, wants are not essential. And 20% for savings. So this way you have clearly divided your post-tax earnings, how you are going to spend it. The other method is what is called the zero-based methods. This is simply what it means is that if you subtract your monthly expenses plus the savings from your take-home income, the result should be zero. That means monthly expenses plus savings will equal to your take-home income, or income minus monthly expenses plus savings will equal zero. The other method is the envelope method. Envelope method simply means that you create different categories of your monthly expenses and put the required amount of money under those heads, or literally make envelopes of different expenditure heads and put money in those different envelopes. This can be done either in a physical form or in a digital form. The second aspect, of course, is building and improving credit. Now, your credit standing has an important effect on your ability to borrow, on your financial life. Among the major decisions like buying a house, leasing a car, applying, and all these things, it is your credit standing that will come to your rescue for availability of finance. If your credit standing or credit scores are good, you will be able to get finance for these purposes, maybe even at concessional rates. But if your credit scores are not good, you may be blacklisted, and no company would may be willing to, or bank may be willing to finance you. So knowing what is your credit standing and how you can improve that is very important. Understanding what affects your credit scores, this can be of great help in building a healthy credit history. So what can you do to improve your credit scores? 1. Apply only for the credit you need. What is important? You only apply for credit for those, or take loans only for important needs. Don't take it otherwise to fulfill what we say wants. Second, understand how closing your credit cards frequently might affect the length of your credit history. The longer and more positive your credit history is, the better is your credit score or credit standing. It is normally better or useful to keep your credit utilization ratio at 30%. This is a level that is recommended by Consumer Financial Protection Bureau. Maybe once or twice you may go a little above this, but this should be your average credit utilization ratio, that is 30%. Further, you should monitor your credit report for any errors on a regular basis. Look out for any changes in your credit scores, because these are going to affect your credit standing. Next, you need to watch your debt to income ratio. Generally, the lenders, banks or financiers, whoever they like to see a debt to income ratio normally between 28 to 36%. Any debt to income ratio higher than 36% will adversely impact your credit standing. So, what we've seen is how important your credit worthiness is. The more you are credit worthy, it is likely that, or it is possible that you will be able to receive favorable terms and better interest rate if you want a loan for any purpose. Third aspect in financial literacy is saving. Now, saving is, I suppose, is nothing new to anyone. Even whether you are a student, you probably would be saving something from your pocket money. So, simply saving is whatever you are earning or whatever money you are given, what you don't spend, that is what remains unspent, is saving. Okay? Now, saving why is saving important? Because saving is a crucial way of building wealth. It is from regular savings that you build your wealth. Now, savings can be done in many ways. Relating to banks, you can open a savings account, there are retirement saving funds, then there are investment portfolios and emergency funds. These are various ways of savings. It is important here to clearly define your saving goals. You should know what your goals in life are, why you are saving, for which purpose you are saving, or what are the purposes that for you are saving, and for each purpose, what is the term or period for which you would be saving. That is important. Next is borrowing and repaying debt. Borrowing or repaying debt, if you have saved, followed a financially disciplined life, then when the time in life comes, for most people, times can come where some emergency happens or they need to borrow for some purpose or the other, maybe some event in the family or whatever it is. So, you may need to borrow for all these purposes, and most people do borrow. Now, your borrowing, they impact your credit and financial situations, because when you borrow, you are incurring a debt. And when you incur a debt, it means that that debt has to be repaid. And not only it has to be repaid within a time period, you also have to pay an interest on the borrowed amount. So, though borrowings does impact your credit and financial situation, and you are then have to meet the responsibility of repaying the debt, but at the same time, the same borrowings make it more easier for you to acquire or afford those things that are required or necessary for your life without being financially stressed. So if you are financially disciplined, then you may not have an issue with the repayment, and at the same time you may be able to afford credit at concessional rates for whatever important requirements you have. Now, use of credit cards is another form of debt. The only thing is that in credit card, you have a small period of time, around a month or something, to pay it back. Now, non-payment of any debt, including the expenditures on the credit card, affects your credit standing. So be sure that your credit card payments are always made in time, and preferably you are making full payments of the amount that you have borrowed and not paying in part frequently. That's important. So understanding this impact that taking impact of debt on your finances, and having a concrete plan for paying that debt and paying it on time is crucial. And this, you will know if you are a financially literate person. You'll know the importance of doing this. Now that we've discussed different aspects of financial literacy, investing is another important aspect, because it is through investing, there are different avenues of investment, that you grow your assets. You can invest in the stock markets, in the bond markets, you can in mutual funds. So there are various in company deposits. So there are different avenues where you can invest your money. These avenues are the safer the broad thumb of the rule is that the safer the avenue of investment, the lower will be your return. That is, lower risk, lower return, higher risk, higher return. Keep that in mind. At the same time, be aware companies or entities that promise you very high returns for your investments, they are probably not genuine companies and fly-by-night operators, because high returns involves high risks, and those companies may not be able to pay your money back. Now, importance of financial literacy. I have been saying all throughout right now that if you are a financial literate person, you'll be able to make important decisions and also understand how the decisions that you are making impact your current and future financial situation. Now, you will also understand the importance of financial safety and security. You'll make decisions that are informed decisions with all your knowledge of the financial instruments and returns and risks involved. Because uninformed financial decisions may not only reduce your earning from your investment, that is, may not only lead to suboptimal performance of your investment, you can even end up incurring losses. And these would then adversely impact your present or future life plans. So it is precisely this that financial literacy helps you to avoid. Avoid making mistakes, minimize the possibility of being cheated by fraudsters and losing money. It also helps you to prepare for emergency. If you are financially literate, you would be having some savings, or have made some savings in your life, because in life some things could happen that are not planned for. Maybe losing one's job, or if you have a business, you're making losses because of reasons that one could not foresee, or some major unexpected expense has come up. So, financially planned your life, and if you are going about in that way, then you would be able to deal with this kind of a financial strain without very much relying on external sources of funds like loans or use of credit cards. So you can manage your debt efficiently and your finances both in the short term and in the long run. So it can also help you achieve your financial goals relatively with lesser difficulty and problems. It helps improve your spending habits. You will be careful where you are spending, on how much you are spending, is that spending necessary or not, and also that there is a need to save and accumulate wealth. If you are doing all this and being a financially literate person, this will also give you a certain confidence. And with that confidence and with the knowledge of the financial requirements that is needed for borrowing or lending or what all these purposes, you will be better able to perform on the financial front. Now, so let's just sum up briefly. So let the strategies to improve financial skills: create a budget, spend judiciously, plan to save, pay bills in time, get your credit report, check it for errors, manage your debt efficiently, invest in your future. If you are doing all this, you are supposedly a financially awakened person. Now, earlier I had referred to the fact that with great changes in technology, which has facilitated the way, which has brought into existence new financial instruments and made financial transactions easier, it has also opened up a whole field where you can be defrauded. You can be cheated. So what should you do, or what precautions you must take to avoid such negative incidents? One, you should never share your one-time password for any transaction that you receive, and especially with strangers. Two, never share your personal identification number with anyone, especially strangers again. You may receive phone calls that your KYC, know your customer verification is due, information is due, and they may seek your personal details. Please ensure, please do not do this. Please do not share the OTP or any sensitive information before ensuring that the call is genuine, or is it a fraud call. So make sure about that. How to become financially literate? You can read books, newspapers. There are many on the internet. There are many sites such as mymoney.gov, consumer education, which is a section of CFPB website, investor.gov. Then there is consumer advice, which is a website created by the Federal Trade Commission. So there is also the Investor Education and Protection Fund Authority, IEPFA, which is entrusted with the responsibility of administration of Investor Education Protection Fund. So all these, you can gather more information from this, and you can be not only a financially literate person. Financial literacy leads to financial awareness. And if you are financially literate and financially aware, your financial journey in life will be more smooth or much smoother, and you will not face any major road bumps. Thank you.